One of the questions I'm frequently asked is, what's the difference between venture capital and private equity? And both venture capital and private equity are ways in which investors can access companies which they wouldn't be able to access through the publicly listed markets. So if they're both investing private capital, what's the difference between venture capital and private equity? Fundamentally, private equity, which I spent 25 years in, are looking for mature companies with a good track record, a sound management team, where they can buy basically a controlling interest, maybe 60 or 70%, and work with that management team for 3 or 4 or 5 years to create value and then sell the company. Venture capital is very different. Venture capital is looking for early stage businesses, most of which have not even reached revenue yet, let alone profitability, but they hold the promise of tremendously high returns. And a venture capital firm needs to be investing across a plethora of different businesses in the hope that out of its portfolio, 1 or 2 or 3 will really knock the lights out. And by knocking the lights out, we're talking 100 times return, which is unheard of in the private equity space. So just to summarize, private equity is looking for mature, sensible businesses where a great management team can double or triple the value of the business. If we're lucky, they might even be able to increase the value of the business by 4 or 5 times. Venture capital, on the other hand, is much more risky, but the returns can be massive. Most PE firms would make 6 or 7 investments per fund, whereas if we think about a venture capital firm, most VC firms would make 20 or 30 or even 40 investments per fund. One of the big differences between private equity and venture capital is the global nature of private equity. The biggest funds, the KKRs, the CVCs, the TPGs, the Blackstones, the Bain Capitals, they're all global. They have hundreds of billions of dollars of funds to invest. And in 2022, the largest deal done here in Australia was Blackstone's $9 billion acquisition of Crown Resorts. Now that is a gigantic deal and distorts the numbers. And if you extract from the 130 deals that were done in 2022 in Australia, the average deal size is $59 million. Still, that contrasts enormously to the venture capital market. In the venture capital market, doing a deal of 15 million is quite normal, or 20 million, or 30 million. It'd be quite rare, actually, to do a deal at the $100 million level, and certainly not the $9 billion level. So one of the critical differences is the scale of the investments between venture capital, $15 million, say up to perhaps $100 million, because these are all early stage investments looking for tremendously high returns. In private equity, the range is, let's say, $50 million up to literally $9 billion. Let's focus on my 25 years in private equity and what you'll get from my Essentials of Private Equity program. There are about 50 general partners or private equity funds in Australia. And I'll be telling you who runs them, how long they've been going, what returns they've had, what their secret sauce is, what their strategic objectives are, who runs them, which is critical. And all of this information is bang slap up to date. Huge amount of data-rich information for you to understand the Australian private equity market.